More than a year after China's regulatory crackdown battered the once fast-growing business of billionaire pony moms Tencent, the company has few silver linings in sight, and the country's latest COVID outbreak will probably dim growth prospects for much of 2022. Shares of the Hong Kong-listed company plunged as much as 3% Thursday after it reported almost zero growth for the first quarter. The weaker-than-expected results, which also include a 51% plunge in net profit to 23.4 billion yuan, $3.7 billion, came as almost all of Tencent's growth engine sputtered. The company's advertising unit is bearing the brunt of the impact. As the Chinese economy takes an increasingly bigger hit from the country's COVID containment measures, companies are dialing back their advertising budgets. In the first 3 months of the year, revenue from online ads decreased 18% to $2.7 billion, which Tencent attributed to weak demand from advertisers in categories such as education, internet and e-commerce. Sean Yang, a Shenzhen-based managing director at research firm Blue Lotus Capital Advisors, says second quarter performance could be even worse. Advertising sales may contract more than 30% from the same period a year ago, as the impact from the lockdown of China's financial hub Shanghai gets fully reflected. The city is now slowly emerging from a punishing lockdown that started in mid-March that has stretched more than 6 weeks. Some residents have been allowed outside their compounds, but only for limited times and during designated hours. In the meantime, flare-ups in the capital Beijing and elsewhere have led authorities to seal off certain districts and conduct mass testing. The widespread disruption to logistics and consumer spending is pressuring the economy, and continues to weaken corporate demand for ad placement. Second quarter results might be worse, Yang says. People are hoping there will be recovery later this year, but no one knows for sure. Tencent is uncertain when things might look better. During a Wednesday analyst call, Chief Strategy Officer James Mitchell said the COVID situation would determine whether our previous comments still hold true or whether the timetable gets pushed back. The company predicted in March there would be a warming up in its advertising business before